Welcome to World Ledger with Coco Key, your gateway to global perspectives on Bitcoin, blockchain, crypto digital assets, and AI. Everything here is for informational purposes only, not investment or financial advice. Views and opinions expressed by any speaker on the show are his or her personal ones.
Andy, welcome to the show. We have so many things to cover today. I just want to dive in. To kick things off, can you break down tokenization and RWAs in simple and plain English?
Thank you, Coco, for inviting us to your podcast. I think we hear tokenization all the time. I think it's become a big buzzword. I wake up in the morning, I look at Twitter now, talking about tokenization and how it's going to change. If there's one sentence that people should remember, is that this tokenization is upgrading the Rails capital markets running on. We're moving assets from old disconnected systems onto a single modern blockchain ledger. This enables instant settlement, 24/7 trading, and fractional ownership. We've been seeing money going on chain, leveraging this new blockchain's digital finance system. And the end result is stablecoins. Have seen equities, funds being tokenized and bring on chain, and people using stablecoins to settle. That is what we see the power of tokenization, the ability to have these assets on a brand new ledger.
I want to talk about HashKey Group a bit. HashKey Group is publicly traded and probably best known for its license exchange. Can you tell us about HashKey Group's RWA business briefly and your role?
Sure, no problem. Well, I think you mentioned that we're known for our licenses, but a lot of people forget that HashKey was the first institutional investor into Ethereum. That is something that we've been doing since our founding in 2018. At HashKey, tokenization is a major part of what we do. The differentiation for us is that we provide a very integrated platform that connects investors and asset issuers together. So when we talk to a lot of issuers, we get three very common questions. How do I issue this asset? What is the technology I should be using? And then where can I distribute this? And our platform answers these three questions and caters to investors. My role on the team, honestly, I don't really have a specific role. This is sometimes a joke with people. We're a very small team. We want to be a very startup. We are very flat. And for my role and also everyone's role, it's to make sure that we can put support issuers to bring their assets on chain. We can find ways to distribute them. But more importantly, what matters for us is that what's the bigger use case? I come from a really diverse background myself, which is then this is a perfect fit myself. I started my career in banking, went to Tencent to build games, helping them expand to different new markets, including India, while working on diverse product portfolio. I ventured into fintech, working in Southeast Asia, building unsecured lending, as well as a digital bank. And lastly, I was a crypto founder and launched my token on Base just a few years ago. For me, coming to HashKey and be able to build along with others, this is something I quite enjoy.
You have covered a lot of things throughout your career, and it sounds like a perfect fit for you at HashKey Group. Back to RWA and tokenization. In the past 12 to 18 months, RWAs have moved from the pilot stage to real production. What is driving that shift and what's actually changed?
A little bit history, maybe that will help. Hong Kong actually has been building this since 2022, where it announced its first digital asset regime, allowing people to understand how to issue a tokenized security and what is the difference between tokenized security and a virtual asset. So Hong Kong actually started building the foundation of this 22. It's actually a lot earlier than what we see in the US, where the US started enacting digital asset relevant regulations with the Genius Act and most recently Clarity Act. So to answer your question, in Asia, we've been piloting since 22. We've been trying things out, and that goes the same in Singapore too with Project Guardian. In the early 2020s, in Thailand, there were digital asset allows e-money and the issuance of tokenized securities. We've been doing this for 5 years here in Asia. As we evolved and started building our experiences, the regulation has become a lot more clear and straightforward. Using Hong Kong as an example, in Hong Kong, there's ample government support. We have clear regulation. The SFC, which is the equivalent for Hong Kong, has issued several circulars defining what people can and cannot do in Hong Kong in terms of tokenization and digital assets. They follow a rule called same business, same risk, and same principles. So that's a framework they put together that allows people to actually navigate around them. Eventually, they also understand the importance having trading. Hong Kong also released a circular allow people to trade tokenized securities on the secondary market basis within licensed exchanges in Hong Kong. There's a lot of things happening in Hong Kong, and I think regulations have been clear. But more importantly, because the years of development, we also have really good market infrastructure. Hong Kong's licensed exchanges is one of only few in the world that can trade tokenized securities. If you look at the likes of Coinbase and Bitstamp in the US, this is a capability that they don't have today. Having this clear path allows institutions to come build. One thing that we've been seeing is that global institutions come to Hong Kong to understand what is happening here. The question they're trying to solve is, can they build a product, whether it's in Hong Kong or Singapore and elsewhere, and eventually take these experiences and go back to the respective countries? Japan and Korea are developing regulations to support the growth of digital assets. Southeast Asia is also looking at supporting pilots in tokenization. We've been seeing other countries across the region increasingly interested to bring new innovation into financial markets. All in all, there's a solid foundation in the past 5, 6 years, allowing us to move forward. And we've been seeing a lot of people globally come together, and that is very exciting.
It seems Hong Kong and other Asian jurisdictions have better framework than the US. US has Genius app, but we don't have Clarity app yet. There is no specific clear framework for tokenized assets, RWAs. Maybe that explains why some companies in the US distribute products in Asia. For example, Ondo, their products are not allowed to be sold to US citizens and can only be accessed by foreign investors.
So I do think that Asians have a better framework, has a much clearer framework, but I think it varies by product to product. So on those product, if you look at how it's structured, it is not in Asia actually. They're actually using regulations based in Liechtenstein and also Jersey, which is an island country in the EU. So they're not really leveraging Asian regulations per se. But I think what they hit on the point is that there are certain assets historically has been very privileged to certain people. If you think about equities, in the US and Hong Kong, we take it for granted that we have the privilege to open a brokerage account and have the ability to buy and trade US stocks to drive wealth in our portfolios. In other countries, for example, in Latin America, across Southeast Asia, a lot of people do not have access to these for a variety of reasons. And the ability to get access to a brand new type of asset is actually very exciting for them because this allows them to think about how to properly do asset allocation now. Rather than having 100% of my portfolio supposedly in crypto, in the likes of Bitcoin, Ethereum, they now have the ability to add a new category of assets to diversify the portfolio. To answer your point, we do see Ondo found a product market fit for the products they're offering. They're capturing people with stablecoins. More importantly, they're also capturing an audience who is trying to leverage what blockchain can offer, which is 24/7, being very transparent, and have good liquidity for them to trade on at any time they want.
I want to follow up with that. Is it legal or compliant to sell on those products into Hong Kong or Singapore?
I would say, from our perspective, when we looked at it, it depends on the product itself, firstly, and it depends on who they want to sell it to. For jurisdictions like Hong Kong and Singapore, if you want to sell investment products, you need to go through the local regulators, right? And one of the things they will look at is this a product that you can sell to only professional or qualified investors, or do you want to get access to retail? Typically, if the product is only looking to be sold to qualified or professional investors, the path forward is a lot easier. And there are ways these products can be sold. However, if you want to sell to retail, that gets into a very position. And I think that's just not Hong Kong and Singapore. That the second consideration you think about is Ondo's product considered a security? If you take an Ondo's product and the likes of tokenized equities today, generally speaking, people don't really enjoy the same investor rights. Ondo's product not able to pay dividends in the form of cash or stablecoins. Because if either of these two hit, they would have traits of a security, then need to abide to local security law. If it's not a security, then it's very likely a virtual asset because it's a representation of ownership of stock that has no underlying. you do not get the rights that you have as an investment product. If that's the case, they would need to see what local regulation allows them to do, and changes or distribution channels locally will take these into consideration.
With that big picture in mind, I want to get into more specifics about RWA, especially how Asia and the US compare. Based on what you are seeing, what type of RWAs Asian issuers are most excited about tokenizing?
In today's market, the tokenized products offered across Asia, if it's a tokenized security, money market funds, cash equivalent products, some commodities, these are the three kind of products that we see prominently on the market today. However, as we're talking with different people, we start seeing two new forms of investment products that people are exploring because they see potential investor demand. One type is payment receivables. Coco, you would know payment companies, they help settle trades between merchants and the bank. That is one of the capabilities payment networks do. Oftentimes, they have receivables on accounts, which takes about, on average, 3 days to settle. So now we have people thinking about, can I take these receivables, 90 cents on the dollar, to get some capital back to increase my operational efficiency? And that is an investment product I think people increasingly interested. The likelihood there's a fraud on these payment networks, I wouldn't say there isn't, is fairly minimal. These are very liquid products that people can buy. So these are kind of ideas that we see people have as one example, taking things that historically we would not see and turning them into a product. The second big form of things that we are increasingly seeing is things that historically not available to people. For example, intellectual property rights. Increasingly, we've been seeing people taking some of these intellectual property rights, tokenize it, and allow people to enjoy potential revenues that comes from it. In the world of anime, typically a lot of these contracts are structured with minimum guarantees. Or even in the world of sports, if you want to get licensed to an IP, there's minimum guarantees. With these minimum guarantees, you can then calculate investment returns. You know what's the minimum you'll get, and whatever you have extra after that is the upside. These are two new forms on the market, quite interesting. At the same time, we are also seeing people just taking typical financial assets, equities, bonds, commodities on chain. We're also seeing funds come into the market, which generally yields around 7% with daily redemptions and a variety of others. Just to summarize in 2 key points, I think we'll start with the products that people know today. We're seeing a lot of money market funds. We see tokenized equities. I think we'll see increasing tokenized debt, more tokenized commodities, things people understand. And I think there's also another class that's uprising, things that we typically don't get access to, payment receivables, invoice financing, property rights.
In the early days of RWAs, people talk about tokenizing illiquid asset, for example, real estate, but it proves that it doesn't work as people expected. As an operator, what would you tell issuers or potential issuers what kind of assets they can consider and what to avoid?
Typically, I ask them 3 very burning questions. I joke with them. These are questions where go soul searching. The first part is, why do you want to do tokenization? Because in the days when I was building in crypto, I speak with a lot of builders and we share ideas on projects. But oftentimes the notion I got was that people are issuing tokens for the sake of issuing tokens. When you take about the context of tokenization, we do see people issuing the tokens for the sake of issuing tokens too, because they want to be innovative to try things out. They want to create a brand new investment product that is not offered today. There are all kind of questions that people ask themselves, but that's the first thing I would ask is, why do you want to tokenize? Why do you want this token? And to figure out the motivation behind it. If the motivation is clear, the second thing I would look into the structure and the quality of these assets. As you mentioned, real estate tokenization has been a big topic for a lot of people in the past 3 years. But if you look at the past 6 months, I haven't seen real estate tokenization at all, but more financial asset tokenization. That goes to the third point. Can this asset be traded? Investors are more sophisticated now. They will invest in assets they understand. Real estate historically is a very complicated asset. Real estate in different countries are very different. The regulations are very different. Not to say there's residential, commercial, but if you look at financial assets, it's a lot simpler. People also want assets that is composable. We see more crypto investors or investors holding stablecoins, interested in tokenized securities and tokenized assets, because they do hope that in the future, there are ways they can take these tokens and simply try things like collateralized lending on blockchain. Apollo and the likes of others have tried in different way too. So Apollo through Securities has done a token called ACRED, which is based on one of the debt funds. They tried to do what we call a looping strategy with Polygon just about last year, if I remember correctly. And that is just a simple way to help you understand the potential of these assets being taken as collateral and used for lending purposes. Just to sum, I would ask 3 questions. If they consider issuing a token, why do you want to tokenize? What's the asset? What's the quality of it? Can it be traded? And what is the use case? I was talking about composability and about allowing people to do on-chain lending. But if the ultimate goal is allowing people just to hold it to diversify their assets, that's also perfectly fine. I think that's a great use case.
There's one thing that I really want you to talk about. In the US, we don't have wrapper model, which is very common outside of US. For example, in Europe and probably in Asia, the wrapper model means that it is a third-party custodial issuance, and the token doesn't represent the ownership. In the US, we have, for example, Galaxy, they created a digital tokenization, which represents the legal record of the ownership of Galaxy stock. These are 2 different models in the US and outside of the US. What is the pros and cons? What do you think about them?
In the US right now, we do see a strong notion of people doing on-chain issuance. You mentioned Galaxy. You have funds also leveraging on-chain ledgers. For example, BlackRock did an on-chain money market fund. Invesco did something recently with Superstate. State Street also issued an asset with Galaxy Digital. We've seen people issue on-chain a lot in the US. I would say in Asia, generally speaking, there is no per se on whether or not you can use on-chain as finality. I think the question is that what is the benefit of using a blockchain and why should people be using it is the question that people are trying to solve right now. I'll give you an example. A lot of the funds issued here in Hong Kong, the finality and the golden record is the fund admin's books, which is still off-chain today. 2 reasons. One is that people are a lot more comfortable using what they understand today. And secondly, people are trying to figure out the best operational model that would make the issuers comfortable, the regulators comfortable, but more importantly, the service providers comfortable. I think that's where everyone's trying to figure out as well. I wouldn't be surprised in the next few months that you'll see proper on-chain issuance in Asia, because I think that is a direction that people are going towards to, especially across Asia. Regulated stablecoins are coming on chain. With regulated stablecoins, in my perspective, it doesn't make sense having 2 different ledgers. If I use the stablecoin to purchase something, I would hope that everything could be transparent on chain and for me to understand. But if you want me to give you stablecoins and you still put the record off chain, I think from an operational standpoint, that doesn't make sense. Right now, we still follow the model you mentioned, but wait and see for the next few months. I think you'll see some interesting things happen in the market.
When you say on-chain, does that mean it would be 100% on-chain model? Because, for example, Ondo, what they do is half on-chain and half off-chain. In Asia, the next step would be everything on-chain.
I think that is the direction that, generally speaking, everyone wants to head towards. That is something that we start to see. And I think in the next few months, we'll see developments, is what I would say. So, when I mean on chain, let me also clarify, is to rely on one single ledger as the golden source of truth. Now, obviously, there is importance to still maintain off-chain ledger, but what if the off-chain ledger is just a backup, right? Just something that people can refer to if there's something wrong, while you still maintain the on-chain ledger as the golden source of truth.
You expect more clarity in the following months regarding the RWAs.
Hopefully, there's a lot of things that's developing across Asia. Actually, quite exciting to see all these things move around. Unlike the US or Europe, there's only one single regulation that people can look onto. Asia is very sparse out. Hong Kong has its own regulation, Singapore has its own regulation, Japan has its own regulation, Korea has its own regulation. We don't see harmonization of regulations across Asia just yet. And that is actually one thing you mentioned as well. As someone who's trying to issue tokenized assets in Asia, is there ways for me to have an asset issue here in one jurisdiction and have the ability to distribute in different jurisdictions? From a technology standpoint, it is possible. From a regulation standpoint, that is still being worked on.
It would be a headache if you create RWA product, for example, in Singapore, then in Hong Kong, this product is restricted. This friction between different jurisdictions for different RWA product.
The way to think about this is that it's the same with any types of asset. If I were to issue a fund in Hong Kong, just use funds example, can I also sell this fund into other jurisdictions? In the world of finance today, it's yes. As long as you have proper authorizations, proper communications with local regulatory, and you obtain the right approvals, the answer is yes, you can distribute in different jurisdictions, right? And I think that goes the same for security tokens, tokenized funds we're talking about. As long as it fulfills local regulatory requirements, you can list them and distribute them. And that goes the same vice versa for assets that we see in Singapore. That if you issue there, can they sell in Hong Kong? Yes, but the criteria is you want to make sure that you have the right approvals. The second thing to consider is who you are trying to sell it to. One point I made before is if you want to sell to professional/accredited investors, the path forward is a lot easier. If you want to sell to retail, it requires a lot more thinking and requires a lot more communication with regulators. So if your goal is to sell to professional investors or accredited investors, then I think there's a clear path on distribution in different markets. Wouldn't be restrictions. It was more like, are you selling the product to the right people is the question. And issuers should be asking themselves.
Some companies tokenize SpaceX stock and distribute through in different channels. If a party is selling that token to Hong Kong, they have to go through regulated channels, go through AML KYC. Is that the procedure to sell it to Hong Kong qualified investors?
Before we go into whether or not SpaceX is allowed to be sold, I think let's look at what the structure is. Because people could potentially package it in a fund or an SPV, right? And you tokenize the SPV and you sell it to certain investors. And so number two is where is this vehicle? Typically people use BVI and Cayman Islands, offshore entities. Third question is who is eligible for it?
Actually, RWA product seems to me there's so many legal aspects to consider. It's not as simple as people think.
The whole token security market didn't really start growing until 2024. And that is when BIDL started coming out from BlackRock. It's still quite young, to be honest. It's been only 2 years. I think investor education is something that is still catching up. You're right to your point. Because you're selling a security, there are a lot more considerations happening in the back. That is why you see right now that the people that's issuing these tokens are typically large companies, because these companies have a good understanding how securities are issued. So years experiences, whether it's to issue funds or other assets, they're now issuing these using brand new technologies.
That's a very good point, and that's something back in my mind. I think RWAs, at least at this moment, it's big players' game. Smaller players don't have the advantage of channels, customers. Big players have everything. They have the products and they know how to turn them into on-chain product. You agree or disagree?
Question to you. Is Ondo a big company or a small company? Right.
True. Ondo is the new player, definitely.
I don't think it's really whether or not a big company or small company have an advantage. If you look at even in every technology cycle that we've been through in the past, I just go to the past decade, you see small companies pop up with brand new ideas, very innovative products, eventually capturing markets, and larger companies follow suit. In blockchain today, we start to see smaller companies find the product market fit. From my own experience working in large companies, we get blinded by our own scale because we only see the customers that we have today, but we don't see the customers that we don't have today. I just think small companies don't have the same resources that large companies have when it comes to legal compliance to navigate and understand how to properly issue a tokenized security. I'm actually quite happy that in the ecosystem today, Ondo is part of it. We also see Plume, which is also pushing tokenized securities. HashKey, we're doing a similar job too. We're working with institutions to build out their tokenization strategy. I just think small companies don't have the same resources that large companies have when it comes to legal compliance to navigate and understand how to properly issue a tokenized security. Just an extension of that point, issuance of tokenized securities is growing, But I also see the usage of these token securities growing. I mentioned earlier on that Apollo did something with Orpho, which is an on-chain vault. Aave also said they want to do securities lending. We see OKX and Standard Chartered in the Middle East experimenting collateralization of BIDO, which is the BlackRock money market fund. We're seeing people are taking these token securities and trying to understand what potential use cases going to have other than having investment returns. I think that's a job for small companies to help. This requires a good understanding how blockchain works, a good understanding how securities work, a good understanding how liquidity works. All these three are really tough.
That makes a lot of sense. And it's encouraging. You convinced me smaller companies have the opportunity as well. When it comes to distribution, Asia in particular, which kind of distribution channels are winning or getting traction? For example, is it DeFi pool or exchanges, crypto exchanges? What do you see out there?
At this time and point, the main form of distribution is through digital asset exchanges. There's a few reasons behind this. One is that most of digital asset exchanges distributing tokenized securities are licensed and regulated. From a trust standpoint, it's much easier for investors to trust a licensed entity because they feel safer. And from an eligibility standpoint, these are also the venues able to distribute securities. Down the path, will we see other venues? I think so. We will potentially have distribution of these tokenized securities on DEXs. That creates a brand new venue of distribution. And we may also see potentially different forms and ways to issue tokenized securities. That may open up other use cases. Lending is one thing that I mentioned, but I think there's a lot other things that people can do with these tokenized securities. I think it's also because a lot of things are evolving quickly in Asia. And the pace of innovation that we see in Asian markets is actually phenomenal. And we are seeing people trying to come up with very creative but proper ways to help people get access to these brand new types of assets. I feel Asian investors are a lot more open to new forms of investments. So I'm sure down the road there is new distribution more on-chain native. I don't know when that day will come. I do hope that day will come sometime in the future.
For an American company, if they want to create an RWA product, for example, for Hong Kong, Singapore, or Japan, do they need to go to Asia to create the legal compliance structure and then talk to local regulators? Or they can just do that from outside of Asia. And then with that product already designed, then talk to the local distribution channel and regulators. What do you see? What is the process?
I mentioned bits and pieces in our conversation. I think three things. Firstly, is going back to the point, who are you trying to sell this to? The second thing here is where is the most optimal structure for this product, whether it's jurisdiction wise and structure wise. Is it through a form of fund? Is it through a form of SPV? And then lastly is which are some of the jurisdictions that you want to distribute them in? Because as I mentioned, some of the products require you to talk to local regulators. After thinking of these three questions, you can create a path forward. Example, we have people who have funds in Luxembourg and they want to tokenize that fund and distribute in Hong Kong or in different jurisdictions that they operate in. Now, UCITS funds are sold in Hong Kong today already. The majority of them are targeting professional investors or credit investors. They won't be selling to retail. The process then will be determined through their communication with local lawyers or based on their internal legal counsel's advice. Then they will decide, is it necessary to discuss with regulators? If they want to do retail, you must then talk to your local regulator and get the proper approvals and authorizations for distribution. So that's where I would think about it in terms of the path forward, the few steps I'm thinking about. Who do you want to sell it to? Where is this asset located from a jurisdiction standpoint? And what's your counsel's advice internally? Because then they'll help you structure path forward.
From our discussion throughout this hour, one impression I have is technology itself is not the hurdle. Most of the hurdles come from legal, regulatory, compliant aspect.
Yeah, it hit on the spot. And I think that's where people are looking forward to what the Clarity Act can bring because it creates a framework for people to operate in. And that goes the same with any jurisdiction. That is something that people are looking forward to.
For RWA transaction, it requires, or most of the time, it requires stablecoin as on-ramp offering. In Asia, what do you see? What kind of stablecoins are mostly used?
What we see in the market, USDT and USDC majority used. US dollar stablecoins are the majority. Increasingly, we see in Asia, regulators are pushing for license regimes. I think part of it is also they want the ability to distribute to retail in a very regulated and compliant way, similar to how people handle money. You see Hong Kong pushing out a stable ordinance. Malaysia is also looking into stablecoin licensing. Korea is pushing for it. There is stablecoins license being pushed out in Japan. I think this is the first step of many things for broader stablecoin adoption in Asia. That also gives a pathway for institutions and larger companies to get into digital assets. It goes back to a point that you were talking about, why is distribution mainly handled by digital asset exchanges? One thing that I mentioned is just trust. They trust licensed entities.
I guess the stablecoins that are regulated will work well with RWAs because RWAs will be highly regulated as well, especially for retail products.
I think that's what people are expecting to happen as well. We have two stablecoins coming up in Hong Kong. The license were issued back in April this year. The HKMA and these companies have said the stablecoins will go live sometime this year. This is a good pathway to drive adoption. You're absolutely correct. They will help drive the growth of tokenized funds or other forms of tokenized securities.
Before we wrap up, could you share any plan for HashKey Group for the next 6 to 12 months for RWAs? Any exciting project that you are working on?
For us, we are looking at expanding our coverage into different markets. Earlier this year, we announced that we invested into a consortium that is obtaining a license in Vietnam from an exchange perspective. And also, we provide technology to that company as well. We are also considering other jurisdictions. Market expansion is definitely something that we're looking to, and tokenization plays a big part into some of the market expansions that we're thinking of. The second part we're looking to do is connectivity and distribution. Because I think, Coco, you mentioned one thing that is quite important, and that what differentiates our platform is that we can handle distribution. HashKey doesn't just issue a token along with the issuer. We also work with issuer to find what's the right path for distribution as well. In order for distribution to happen, we need to have liquidity. That is something that we're thinking. How do we build on top of regulations in Hong Kong today and bring more liquidity? For example, Hong Kong announced that they will allow exchanges in the same group to build connectivity between exchanges in different jurisdictions. We operate in different jurisdictions. One question we're asking ourselves, we have this regulation in place. How do we build that connectivity properly that would be advantageous to our customers? Once we build connectivity, that opens up distribution, potentially even broader distribution for tokenized RWAs as well. Lastly, the big plans is how do we work with more people to bring their assets on chain? I think that's the question that you're asking ourselves. There's a few ideas that we have thought of. Ultimately, we want to make sure the issuers themselves are comfortable before we push out any initiatives. Longer term, this is my personal interest. I do hope that we can take these assets and find use cases in a broader way. These are securities. People holding these assets will need to be KYC'd and will need to follow proper AML rules. Are there ways to use these assets in a compliant way? And that will also give the benefits that we see on blockchain today. Big questions for myself. I don't have an answer just yet. But this is a question that keeps me very excited because it brings me back to days when I was building products at Tencent and building digital banks. I'm hoping that some of these ideas will come to fruition in the near term.
Thank you so much for coming. It's a wonderful conversation.
Thank you.
Thank you for listening. Your support means the world to me. Share this episode with friends and family, and don't miss out on my newsletter, worldledger.substack.com, for the latest updates. See you next time. Bye bye.